Our market master is with us, Mihir Vora, Chief Investment Officer at Trust Mutual Fund. Mihir, great to have you with us here. Thank you very much. I want to start with, of course, congratulating you, all of us, on the 22,000 milestone.
Oh,
a 10-day break and then right there, right?
So it looks like every time I come here, we are celebrating a new high.
Yeah, I was just going to say that, but I didn't want to jinx it. But every time he comes, the markets are tearing away.
So, we time it like that.
Not complaining. Nobody's complaining.
How are things looking, Mihir? With how we had a fortnight of a break where the market didn't do very much, and then you had Reliance participating in IT, which is started to fire as well. Yes. How believable is the IT move according to you?
So I'm still a bit of a skeptic. A lot of the move in the last couple of days would be because of short covering. I think everybody was neutral to underweight on IT, given the fact that there is a slowdown. And if you look at the hard numbers, we are still 0 to negative in terms of profit growth. Headcount is still getting reduced. So it's not all hunky-dory, especially in the large cap companies. Mid caps, of course, there is case to case good pockets of good growth, I would say. But in general, the slowdown thesis for the US and Europe does continue. And if you look at all the other hard numbers coming out of the US, there is a slowdown. Now, if the Goldilocks situation pans out, it may not be a recession, but there's certainly going to be a sharp slowdown.
In a way, it's a kind of but that's what markets do, right? They throw the most unexpected thing your way because it's an odd time to turn very constructive on IT, because if there is something to happen in the US, it'll happen this year.
Absolutely.
Right? As you said, maybe it's a very soft landing and everything will go well. On the other hand, there could be some downside to growth, etc.
Absolutely. But it may be that situation where people start discounting rate cuts in the US and then followed by rate cuts in India. And in that situation, we have seen that cash flow generating companies do tend to outperform. So markets probably may be discounting a slowdown, and that's why you might see some of the cash flow high quality companies outperform. Unlike last year or this year, for the last few months, we have seen value outperforming. You might again see cash flow outperforming.
Okay, by the way, we are all talking about the Nifty, right, at 22,000. Let's not forget the grand old index, the sensex at 73,200. Big milestones being hit on the, the grand old index as well. Mihir, thanks for joining in. This has been a spectacular market, and we're heading into a lot of big events, right? I mean, there's the election, there is first the vote on account, and then there'll be the full-blown budget in July. Do you think in the run-up to these events, could the market build on to its gains, or are we looking at some sort of volatility? And what's the big event that could continue to sort of provide that momentum to the market?
So momentum to the market is clearly being driven by liquidity, both global as well as local. And I was on the road meeting investors last week and distributors. And the question they are asking me is, what will bring the market down? Because they are seeing such inflows from their customers and clients that there is a good amount of local liquidity out there. Globally, as we just discussed, if we are building towards a rate cut in March in the US, then again we are talking about better liquidity. So liquidity support to the markets should continue, but we should not forget that that is because there is a slowdown. So that could create some volatility in the market. And of course, the lingering risk of the Red Sea issue, if it escalates and you do see some more disruptions in the trade channels, then that could lead to an inflation scare. So that's one more risk I would be watching.
Okay, all right. Hi, Mihir. Good to have you in the studio, and keep coming more often, right? If we're going to get fresh all-time highs, why not? But how do you approach, the banking theme? And in particular, I wanted to ask you about the PSU banking theme. Because for many years, maybe 5 years prior, maybe 2017 or prior period of that, you'd be saying PSU banks we do want. Always there's a problem. They have been the biggest wealth creators in the last 18 months or so.
Absolutely.
Do you believe there's still more re-rating in store, and your preference at current reckoning? Because the private sector banks, they haven't really moved, particularly HDFC and Kotak. So how do you approach it?
So in my view, PSU banks structurally can do at best in line with the market.
Okay.
I mean the Nifty bank index, so to say. I don't see them structurally outperforming for a long period of time because the thesis of private sector gaining market share will continue because of better management or operational flexibility, whatever you call it. Having said that, in the last 12 months, the kind of move that we have seen, I would also consider it as a bit of a catch-up move, because post-COVID, the private sector banks, especially the fast-growing private sector banks, retail-oriented, they went up by almost 2 to 3 times, and PSU banks probably went up by only 50 to 100%. So there was a large valuation gap that had got created, which is now corrected. So I would now rate both of them at par. And private sector banks will continue to grow a little faster and stock price-wise also a little faster based on their earnings growth.
So you'll
now.
be leaning more towards private rather than PSU.
Absolutely.
And
Because
current
now I think it's time we start looking at the overall earnings growth. The valuation game is over.
Okay.
Amir, we got the budget coming up. It's a vote on account, right? So should we? By the way, the 2019 budget was a big one. The PM Kisan Yojana, etc. Everything came through.
Absolutely.
It's still early, but not that early also. So we can maybe talk about it. Any expectations?
I would expect the capital expenditure growth to continue, especially when we are talking about railways, defense, roads. I think that thrust will, at least for FY25, will continue. I would expect some more extension or increase in amounts under schemes like PM Kisan, because there is rural stress. We are still talking about a K-shaped recovery. So that should continue. And I don't think the fact that it's a vote on account should make it not possible for the government to increase allocations, because it's an existing scheme. So you can always increase allocations to existing schemes. So politically also, I don't think that should be a problem. So some more support to the rural masses, continuation of capital expenditure, and I don't know whether they can do it in a vote on account, but some more tweaking of the income tax slabs for the middle class, so that consumption gets a little bit of a further boost.
Is there any takeaway from a stock-specific perspective there?
Not really, nothing disruptive. Yeah, one more thing that I think they could announce, again, it's an existing policy, is extension of the 15% tax rate for fresh investments, because that's, I think, lapsing the next few months.
Okay.
So that if you want to, do PLI and make in India, that 15% tax break extension should happen.
Okay, there's a pen and paper right there in front of you. Why don't you write down your expectation? And there's a ballot box as well. You can just slip it into that ballot box.
Definitely, I'll do that.
Yeah, when, as and when you're comfortable. But we hope Finance Minister listens to all of those requests.
Santa's wish list.
Yeah, Santa for the markets, right? But I wanted your thoughts. By the way, I just want to spot a couple of stocks. Indigo has hit a fresh 52-week high. Now, over the weekend, we've all seen, so much back and forth on what's happened with the delayed flights, etc. But one thing is for sure, that monopoly exists with Indigo, and UBS, in fact, this morning has hiked their target price to 3,700 rupees on Indigo. Big upside to the current market price. I wanted your thoughts here. This entire space, travel, tourism, within that religious tourism, right? There are big events coming up as well. Do you think there's more to go, not just in Indigo, but in the likes of, say, something like an Indian hotels? Your thoughts?
I think that should continue, and Prime Minister himself has started encouraging more domestic tourism. So that's a clear sign that we need more domestic tourism. And I mean, there is shortage of infrastructure everywhere. So I think companies which will expand and invest will continue to, get a premium.
Last time he gave the clarion call for public sector enterprises and PSU banks.
And
we
then
don't know what happened, right? So we should pay attention.
Yeah.
Thanks very much, Mihir. Great to have you with us here. We would have had a longer chat, but IT earnings are with us. So
Definitely.
Thank you very much.
Always a pleasure. Thank you.
Well.